Okay, so to this week's topic is about dividend payout policy. All right. So these are the topics that I will cover in this video. So the first one is something called dividend payout ratio, how much company pays out to the dividend. Second one is stock repurchase, or we call it buyback. So company buys the stock buy the stock back from the investors. Then the last one is the payout controversy. So does it really matter to pay the dividend out? Is it important, or actually is it irrelevant? All right, so that's one of the things we have been talking about in this finance for a long time. Okay, so I will introduce this thing. Okay, so let's go. So remember, uh, this is how things work. So let's say this is you are the investor. You invest money in your coffee shop business. Okay, then coffee shop makes some operations, sell the coffee, sell some breads and so on, and then after that, business pay the dividend back to you. Okay, I want you to note these two things. So you get dividend only after the business makes profit. So that means, let's say you invest today, then you cannot demand, okay, I want the dividend back. I want the dividend tomorrow. It's not gonna work. Okay, so you invest in this business, then this business buys some assets such as maybe coffee machine. They need to find a place to operate the business, hire the employees, and start selling the coffee. Then maybe after that, then they make the profit. Then only after they make profit, they can pay the dividend. Okay. So in other words, dividends are paid from business profit. Okay. So unless your business makes profit, they cannot pay the dividend back to you. So remember, in our class, we talked about some airline business, such as TG, Thai Airways, or AirAsia. Remember that they are not making the money. So the investors of this company cannot receive dividends because their business is not making profit. Okay, so that's how the dividend works. So the question is dividend important to investors? So I guess, obviously, I guess it's yes. Okay. So if you're the investor, you can expect two things as a return on your investment. First one is dividend, and second is capital gain. Okay. So dividend, something like it's like the vehicle that brings the money to you. Okay. So something that delivers the money to you. Okay. In finance, we call it passive income. Okay. So you don't have to do actually anything. You just sit there, just wait. Then your company pays a dividend to you. Okay. So I'm sure that all the investors care about the dividends in general. Okay. The second one is capital gain. Capital gain is just a stock price. Okay. So this is an example of AOT, Airport of Thailand. So this is last Friday, March 20th. So stock of AOT went up 14%. Okay, so it seems like nobody is flying these days and the airport seems to be empty, but still people buy AOT stock for some reason. Okay, then let's say in the morning on Friday, if you buy AOT's stock at, let's say this is like 45 or 46, then in the evening you sell at the 53. Okay, then you have a 14% profit in one day. Okay, it's not 1 year, only 1 day. Okay, so that's capital gain. Okay, but anyway, come back to this question: is dividend important to investor? I would say, I think all the investors said yes. Okay. What about the management side? Okay, so from investor side, okay, maybe the dividends is very important. But how about from the management side, management of the business? Is it important to pay the dividend back to the investors? Okay, and there's some survey. This is 2005, I think. So it says, for example, 90% of the managers say yes, agree that they try to avoid reducing the dividend. Okay, so last week we covered, remember we studied dividend constant growth model, or like no change, the constant same amount every year. Okay, So company tries to increase their dividends, or they keep the same amount every year. Okay, so that's what this statement is about. So they don't want, they try to avoid reducing the dividend. Well, how about the second one? It's also 90%. They try to maintain smooth dividend stream. Okay, I think the first and the second question are almost the same thing. So they want to have the smooth, no surprise dividend payment. Okay, so investors don't like surprise. Okay, so if your business pay dividend, let's say 10 baht this year, but they will make dividend only 1 baht, from 10 baht to 1 baht, investors will not be happy about it. Okay, then maybe you get fired. All right, so that's what they. So I'm not gonna go into detail every question, but the message here is that dividends are also important to the management. Okay. All right. So this is something called dividend payout ratio. So it's the ratio. So it's naturally it's in percentage is equal to dividends divided by profits. Okay, nothing complicated. Really easy calculation. So for example, let's say your coffee shop makes profit of 100,000 baht this year. Okay, then they decide to pay dividends of 50,000 to the shareholder. Okay, so it's 50,000 of dividends divided by how much the profit is, which is 100,000. 50 divided by 100 equal to 50%. Okay, so this 50% means that 50% of the profit is going to be the dividends to be paid to the investors, and the other 50 maybe the business keeps the other half of the 50% maybe for to buy new machine or maybe expand the business. Okay, so this is about the dividend payout ratio. Okay, maybe I stop here just one time.